Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. Our group consists of Mohammad Suffian, Mr. Liu Tze Ping, Amirin Arsyan, and myself Luqman Najib are here to present our group project for MBA6054 with the title of the Integrated Department Operation Dashboard. Our agenda today is straightforward. We will cover the dashboard context, the financial structure, the operational KPIs, and finally, the benefit of integration. We begin this project by asking, what is the current context of our financial reporting? Too often the data is disconnected. It should be CFO level integrated dashboard, focusing on cross-departmental integration and act as decision support tools. Dashboard is designed as management decision support tool, not an accounting report. For reference, this dashboard is sourced by Power BI and developed by Cousin Analytics LLP, adapted for this academic analysis only. We identified three critical reasons for this dashboard. Number one, to establish a single version of truth for receivables, payables, and cash balances. Number two, to see cause and effects. For example, we need to see how aging receivables immediately weaken our net cash flow. Number three, to improve CFO governance and accountability. Next, Suffian will share more on financial performance and cash flow.
Now I continue our group's presentation. Rationale, managerial perspective. From a managerial perspective, this rationale allows us to enforce that single version of truth and ensure governance is measurable. CFO dashboard shown the executive view. For the year 2024, you can see we are maintaining a gross margin of 68.17% and an operating margin of 28.55%. Our solvency is very strong with a current ratio of 8.08. The structure behind that view is built on 6 pillars, namely income statement, balance sheet, cash flow, AR, AP, and bank analysis. This ensures a holistic view of the firm. Here, we see the summary visualization. It consolidates the income statement, the balance sheet, and cash flow trends into one view, allowing us to spot variances immediately. A key focus of this deck is liquidity. In this section, we analyze the cash in hand, the cash in bank, and total cash flow trends to ensure that we can meet our obligations. The accounts department KPIs should be measured by accounts receivable, AR aging, accounts payable, and disputed payables. Drilling deeper into the cash flow statement, this table breaks down our activities by region: Australia, Canada, France, Germany, New Zealand, the United Kingdom, and the United States. We can see exactly where our working capital changes and tax paid are impacting the bottom line. For the accounts department, we focus on receivables and disputed payables, and for corporate finance, we monitor net operating cash flow and working capital. Now I pass to my group mate, Mr. Liu, to elaborate further.
Okay, thank you, Suffian. Now I continue with the slide number 11 to 15. So for the joint operational panel, cash is issue conversion cycle, forecasted inflow against outflow, and coordination issue between departments. Next is a revenue to cash cycle. First, for the revenue to cash cycle, accounts handle the billing, but finance use the data immediately for forecasting. They are no longer separate function. Let's look at the account receivable dashboard. Our total receivable is 8.7 million. The red flags here is 0.7 million, and overdue payments, which represent 8% of our customer. However, the forecast show positive momentum with USD 881,773 expected to flow in next month. For the next is the procure to pay cycle. Secondly, while accounts process the invoices, finance is simultaneously optimizing our working position. On the account payable side, we have 2.3 million in total payables. Partially, 0.38 million is currently disputed. We are monitoring the closely to ensure that we don't have impact when the relation or cash outflow are necessary. The next is the cash and bank management. Thirdly, we bridge the gap between simple reconciliation and strategic liquidity planning. Next is the interpretation of the result. We interpret that the result through understanding of profit is not necessarily mean cash. Accounts receivable, aging causes volatility and exposure to account payable risk. So that's from me. Now I pass to Amirin for the next explanation.
What are the benefits? Simple. 4 benefits, which is transparency, faster decisions, better governance, and educational and capacity building value. We have transformed traditional reporting into an analytics performance system and significantly improved cash discipline. However, it also comes with limitations such as data accuracy dependency, limited granularity, whereas providing summarized insights, and behavioral resistance from inter-departments. Therefore, to address the limitations, we recommend the 5 steps. Firstly, introduce cash conversion cycle KPI, explicitly link account receivable days, account payable days, and inventory days into one integration metric. Secondly, auto data feeds direct integration with accounting system automation. Third, scenario analysis. 4, role-based views, and last but not least, early warning alerts for overdue accounts receivable, liquidity breaches, or forecasted cash deficits. In conclusion, this dashboard supports CFO decision-making by making financial integration visible and actionable. Thank you.